Hey, what's going on, guys? This is Terrence Ray back at you with another stock market update. It's hitting the fan right now. Normally when I do my weekend stock market updates, which is what this is, I normally do it before the futures opens on Sunday, and I get it put out to you guys. I am doing it now. The futures market is open. It is 9:34 p.m. on Sunday, April 6th, 2025. We're dating this video, right? We might be watching like another by the time tomorrow comes, maybe another market Monday, right? The market is down right now and continuing to go down. It's 148 handles on the spools. We are approaching almost 3%. If I pull it up right now, what's crazy about this? Here we go, right here. It was down further. Like we don't got it pulled back some. So where it's at now, it was actually had a low of 48.32. That's crazy. Um, so look, guys, what's wild, you guys know how I normally do my expected move for the week, right? So I come to the SPX and then I kind of had to do it a little different because now I'm in the Tasty Trade platform. I haven't seen this before. Normally, when I come in here, I look at the week ending in Friday and I chart out the expected move right here, right? There is no expected move right now, right? So and I'm watching these options get repriced. I'm watching them move. Right? If you're looking at, you can look and see, even though the market isn't open, you won't be able to do anything in these options in the SPX. The SPX is option only. You won't be able to do anything until the market opens tomorrow morning, Monday morning. But you can see the movement in the options. And I do not see any weekly expected move. So what did I do? I came to the S&P 500 futures and then I went over here and you got an expected move here of plus or minus 400. That is huge. I don't think I've ever seen that ever. And I'm not old, so I didn't see the Black Monday market crash. I didn't see all of that. I seen COVID, and this is where and this is I don't think it was like this during COVID. If I remember correctly, this is pretty. That's why I decided I almost went live. I started the live stream it, but then I was like, I'm just kind of freestyling. Um, Now, what I will say is this. Right before, I think on Friday, I jumped in the bond market because I said, well, eh, if it started selling off towards the end of the day on Friday, I said, well, if it continues, then we might get a pop in bonds. Lo and behold, so this was Friday, and look what it did earlier. It popped all the way up here, but then it pulled back. So I think that the bonds will continue to go higher. The Federal Reserve is going to have to cut. I don't see how they're not going to cut interest rates. And to be honest with you, even if they do, because the bond market is signaling that a cut is coming, and let's go. I'm gonna pull up Polymarket because I want to show you guys something. Um, I'm gonna pull up something real quick. Just bear with me. I'm over here working on my other monitor. What we want to see, trade war, tariffs, no tariff. We want interest rates. Where you at? Where you at? Where's my interest rates at? Where's my interest rates? We want to see economy, Fed this. Okay. This is what I'm looking for. I'm gonna pull this up over here. Now I'm in Polymarket. These are betting markets. Now, if you're in the US, you can't actually bet these, but you can see what the bets are. We get a Fed decision in May, right? See, if you look up here in the top left, I'm gonna click on it. Let's make it big. Fed decision in May. We got a 28% chance that we get a 25% basis point cut, 4% of 50. No change, 67%. So I guess it's pretty safe that we not gonna get anything there, right? Let's go back. Now let's go to why did it I won't go back. Now let's go to Fed decision in June. Let's look and see what we got. I think we're gonna get one before then. We gotta get one before then. I wish I could bet these markets. You see how it says June 25 basis point cut, 56%? That's pretty good. So based on the betting odds, the Fed is gonna cut rates in June 25%. If we go out to July, you got a 56% chance that you get another 25 there. So those are, a little bit better. I think it's gonna go higher though. I think it's gonna it has to. And you can see right here, you can kind of move your cursor along and you can see now you go back to as of March 20th, it was 33%, 36. Let's look and see. Then it blip. We got a blip. It went all the way up to 50 on April 1st, April 2nd, 50%. Went up to 61% on April 3rd. And here we are on April 4th. It says 62%. And now we kind of leveled out at 57 and 56%. We will see. Uh, we'll see. And you can come on Polymarket. You can see everything. Like you can come on here and look at sports. You can look at you can bet on just about anything on here, right? If you're not in the U.S., but it's valuable to us because you can look at the betting markets and see where the money's moving, and that's pretty much how I base what's gonna happen. So he's gonna cut. He's gonna have to cut. He's gonna have to cut, or the market is gonna keep doing what it's doing. Now, the good thing is, hey, I'm right back here again selling put spreads, right? And forward slash ZN. This is the 10-year note. I imagine the ZB is the same. Chart looks the same on the 30-year. This is the 30-year treasury bond. And here's the 10-year note. So it looks the same. Now, also, I've been talking about currencies. The euro. Here's the euro. Look at the euro against the dollar. So there are things now. You probably can't get in the euro in your 401ks or anything like that, but you can get into a bond mix in your 401ks. If not financial advice, I'm just telling you what's possible to do, right? TLT, here's a 20-year treasury bond ETF, and you can see where it's at. Now, when the market opens tomorrow morning, I expect this to gap higher or be somewhere up in here. This ETF does pay a monthly dividend. So there is a flight to quality, and that flight to quality is money is going into bonds. It was going into gold, and gold is popped again today. So maybe we'll see gold take back off some more. But even though you can look at gold, look at this chart of gold for the past year, up and to the right. So we have seen that flight go from equities into bonds, gold, and we even see some currencies on here as well. This week, it's all about at this point managing risk. You probably getting smoked. If you're still in this market, you getting smoked. If you're still in equities, at this point, you just got to manage it. If you're able to, some things you can do, you can sell calls, you know, what that will look like, right? I'll give you an example. Let's just say, let's say you're in the SPY, and the SPY is now tomorrow when you wake up tomorrow, you're gonna see another gap down, right? It'll be down here, I don't know, wherever 100, another 3% down, right? You can always now when we get a rally, I think it's gonna be furious. Like it's gonna be a crazy rally. You might come in here one day and we see a 10, $15 move, maybe even a $20 move to the upside. And so we had a $31 move down on Friday. You may come in one day and see that move to the upside. So you had to be careful on selling the call, but you can come out here and maybe if I did, I'd be selling junk out here, outside of this expected move. If you're not on Tasty Trade, you probably won't have that, but you can kind of like guesstimate, use Delta. I wouldn't be me personally. I'd be 16 delta and further out, somewhere out in here, and then that'll give you a little bit of relief on your down positions. Maybe selling a call for every per 100 shares that you have vested in whatever stock. If you haven't cut and run, and this really market like this really test if you believe in whatever you believe in. Like you have some people that say, I believe in Nvidia. It's a good company. Okay, if you like Nvidia, if you like Nvidia, if you thought Nvidia was a good company at 137, you should love Nvidia down here at 94. And come Monday morning, we'll see how much you love it even more down here, probably like around 90 or something like that, or 85. How much do you really like Nvidia? Pre-market right now is showing like 92 bucks. So that's the thing. And uh this correction was much overdue. I was talking about this with a fellow trader at work. It was overdue. So there isn't anything else, guys. My playbook has been the same. I've been talking about it all year. Your only relief right now that I see is bonds, gold, and currencies. You can trade those in the futures. You may say, well, if I don't trade futures, how can I get exposure to that? You can get exposure to the bonds through TLT. You can get exposed to gold through GLD. Now, GLD had a $6 drop on, it has an IV rate of 94. And he had a $6 drop on Friday. Now, with gold futures being up pre-market, it could erase this and pull back into here, right? I don't know. Even gold could be overextended to a degree. So you have to, even with that, maybe trade wise, if you it has a high IV rank, any type of strangle, maybe selling, coming out here selling 264, sell the 300, something like that. Take in 330 in credit. If you want define your risk. Come in here, sell the 294, buy the 199. Maybe sell the 266, buy the 261. I think I will move it out a little further, get a little wider. Maybe do like the 262, maybe make it a $10 wide, buy the 252, sell the 290, let's call it 295, buy the 305, make it do a $10 wide, something like that. Like, so you can move these around, these strikes around, kind of mess around with them, do something like that. If you want to do define risk, iron condors, if you have a large enough account where you want to go undefined, take the wing off, just take the wing off, take the wing off, and then maybe move this out some. Come down here to 16 delta. I would sell the 16 delta there, maybe sell the 17 delta here, and boom. That's what you got a 72% probability of profit, 90% of P50, keeping 50 of that, and I would be there. I will stay away from equities. This is the time where if you're gonna do anything, stay in the I will stay in the ETFs, IWM, QQQ, SPY, get real wide with your strangles if you're gonna do them. The market is moving. Be honest with you, I'm all way out. Man, I'd be way out here selling. Look at this. Look how much premium you can get coming way out here selling like a 8 delta on the put side. And then coming out here on the call side and maybe doing something like you could sell a, now this is gonna change when the market open, but you come out here and sell a 8 delta over here on the call side and still taking in 500 bucks. That'll let you know it's a lot of risk. And these moves are huge. So if you're not experienced with big moves like this, and even myself, I got hurt pretty bad on Friday trying to pick a bottom in IWM. I tried to sell a put in it, got smoked. Um, that was a nice loser. Lost about 4 or 5, but out of it, and I sit on the sideline. Now I just got this put spread in the bonds, and it's already green. More than likely, when the market open on Monday, I'll be taking this off for another winner. So I'm just gonna stick with what's working. Bonds are working. I'm staying there. I may look to do something in currencies. Got the euro breaking out. We got the pound up and to the right. You got to pull back here. Maybe probably could look for something in the pound. Maybe with support right around here, 1.27, and look to get bullish again in that. Let's look at the Canadian dollar. Look at the Canadian dollar right here, coming out of a range right here. Let's put a trend line on. Do something like so. Wop. You got something like you could do that. I would do this just like look at that, guys. So you got your retest here, and here we go. If you get something to break here, the Canadian dollar could go that way. So you got a play. Let me save that. You may have a play there. Even when you bring in all the indicators, you can really see it, right? So you may have a play there. So we got Canadian dollar, maybe. Let's look at the yen. Look at the yen. Yen gapped up here. What was that? Wednesday, Thursday, Friday. Here we go. Take this high out. Can we get another move for it to go higher? So let's look at that Australian dollar. The Aussie is tanking. So you might want to stay away from that unless you're shorting. Now, it does have a 36 IV rank. You could come in here and take it to the other way. Maybe sell a call spread, sell I said a 32 delta. If you sell it naked, it only margins you about $976. Max profit 600. You want to put a wing on it? Put a wing on it. I like that. Buy this wing right here. Define your risk. Max loss 340. Max profit 160. Only buying power is what 266. So that's not a bad trade. 72% pop. Selling a call spread. When you sell a call spread, you need the market to either stay down. Like it can go down further, or it can just chop around in here. Right? You got a 36 IV rank. IV collapses, it trends and goes sideways. You make money. So that's a trade. Currencies, you can do something in. I'm gonna tell you what's scary about this market. I think I talked about this on I think a live stream I did on Thursday. Is the banks. JP Morgan got a nasty. This is nasty work right here, guys. I got a perfect bear flag right here in JP Morgan. Now, if I could flip this around, I could do this on trading view. Turn this upside down, I'd be buying this all day because you got a low, made a lower low, pull back, gap down, lower low. I mean, I'm talking about a gap and go, gap, go, gap, go. And this bad boy is going to gap again tomorrow. It's going to gap down some more. When banks, if the banks are selling off and going down, the market will not turn around. You got Goldman Sachs. Look at Goldman Sachs. Look at that chart. Gap and go. Citi. Look at this. Gap and go. Gap and go. Morgan Stanley. So the only thing that's going to save this market now, and it may not even be, um, we may get some momentary relief. If they come in, the Fed comes in and announces like a emergency rate cut. They do that. You may see a little chop, and that'll give you an opportunity to catch your breath. I wouldn't be surprised if we get some circuit breakers. We may have had one tonight. I just I just happened to look at the markets, and I could see when anytime you got a wick like this, something happened. And maybe this is the forming of a bottom, right? A momentary bottom. But one thing I want you guys to look at down here, these little oscillators down here that I use, right? I don't have divergence. So I look for divergence in these oscillators to see when momentum is stopped. This oscillator on momentum wise is continuing to grow past. So I do not have any divergence. So I don't have anything that tells me like that it's slowing down. Think about it like this. Think about like you can see somebody if you watching a car and you watching a car slow down, before it turn. I like to use that analogy. This market will slow down a little bit, and it would you would see that in these oscillators down here at the bottom. But these oscillators are continuing to extend, um, to go sharper down, meaning the velocity of the market going to the downside is is getting greater. It's not slowing down at all. So I don't I you can't you asking me technically like where is the bottom or where do you see it? I don't see it right now. So you just got to be careful. Um with that being said, guys, I think I said enough. I may do another video tomorrow, towards the end of the day, maybe. Maybe we'll see what's going on. I come in at the end of the day, maybe around, I may go live around 3:45, 3:50, catch that last 15 minutes of the market, maybe. I think I'm supposed to go get a haircut tomorrow. So we'll see. But be safe out there, guys. Trade small. Keep your lot size small, or just sit on the sideline. This might be one of those markets where you don't know what you're doing, just sit on your hands. You know what I'm saying? If you're gonna trade with a helmet. Put your football helmet on and trade. That being said, I'm gonna be out, guys. Peace.